morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Okay, I want to talk about the markets this morning and another new play we see in this markets. Okay, basically the equity markets are still in a strong uptrend. NASDAQ just keeps trugging along, going higher, as is the S&P 500. Actually, the market looks very healthy. I mean, the breadth has expanded, the advanced decline line keeps moving up, and we see this rally going on across a lot of broad sectors. So it's only natural somewhere along this line where probably will get some type of correction, but that doesn't mean it's for sure. I mean, and trying to guess this top or trying to guess the correction is a silly exercise. You're better off just watching the price volume action on the indices, the price volume action on your individual stocks, and if they're acting healthy, you should stay in the market. Now, back in March 10th, I did a segment. We talked about why that's when the S&P was approaching that 1470 level, why it was different than October 2007, meaning the similarities were not the same. And the reason I bring that up, people at that time were calling, oh, this is just like October 2007, the top is in and we're the market, that's it, it's doomed. Now, we've gotten through that, we've gone past that. Now what I hear a lot from a lot of traders, oh, it's too frothy, this is just like 1999. Well, checking back on the facts, this is nothing like 1999. Meaning the S&P in 1999, when it topped out, its PE was 33. Basically, the S&P earnings were at about $50. Right now, the S&P earnings are about $100, paying about double the dividend yield. And PE's probably right around 15, 16, matters how you want to measure it. So we still have lots of room to run. So again, trying to guess the top is a futile exercise. Just continue to monitor your stocks. If they're acting well, continue to hold them. I'm a trend follower, so I stay in there until the market proves me wrong. Okay, so now a lot of the stocks we talked about in the past segments, they're extended. You know, one thing you don't want to do in this market is chase stocks. You want to be buying them as they emerge out of a solid consolidation, what I always refer to as a base. So things I'm looking at this morning is the name of the company is Ambarella. The symbol is AMBA. They're a semiconductor company. And what they're involved is making chips for videos and for cameras. Now they're basically, the pivot point for me is $16. They're breaking through that in about double volume this morning. They're trading right now at about $16.80, $16.90. I wouldn't chase it past $17. But an interesting company because the CEO initially worked at C-Cube Systems, and they're the first one who brought about this video compression technology. So they may know a few things going on there. The last few quarters, earnings came in about 100%, up 30%, up 80%. Sales been consistent, about 24%, 20%, 25%, so they're pretty good there. Now going forward, earnings analysts are, for the next year, are viewing them as flat with a 30% increase the year after that. So now if you look at the chart of it, it's corrected from $16 down to about $12, and we saw, if you look at a weekly chart, a lot of high volume weeks showing good support, good accumulation. Now this morning it's breaking past that $16 area. So you might want to take a look at it there. It says you wouldn't chase it past $17, but if you can buy a little above that $16 area, and if it holds up today, that might be something you want to try and see if it's got legs. If it drops down below 14, the trade may not work now. It's still a first stage base. It's kind of what I call a base on base pattern, meaning it tried to break out previously, ran up a little bit, corrected again, and now is at that point again, one should be looking at it. So as always, let price and volume be your guide. Don't get too concerned when you hear everybody yelling, this is just like 1999, because in fact, if you go out on the street and tell anybody you're buying stocks, they look at you like you're crazy. Stocks are still the worst thing in the world in people's minds. However, you call back in 1999, that's all anybody ever wanted to do was to own stocks. So have a good trading day. This is George Tkaczuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.